Hello and welcome along to Susty Talks from Edie, our short but sweet one-on-one podcast interview series designed to keep us all a bit more informed and connected on environmental sustainability issues, even if we only have 20 minutes to spare. My Susty Talk guest for today is Gary Doran, who is partner at Lockton and head of Lockton's London-based energy and power team. And he's here to talk to me all about the role of insurance in supporting the energy transition. Gary, thank you so much for your time. How are you?
Sarah, thanks very much. Very well, thank you. Thanks for having me today.
No, glad to hear it, and thank you so much for your time. Introductions are probably the obvious place to start. It'd be great to have a little bit of an introduction to Lockton and its involvement in the energy sector and your role within that.
Many thanks, Sarah. Thanks very much again for having me on today. So my name is Gary Doran. I head up our energy power team here at Lockton, and I also chair our European ESG Committee and sit on our global ESG committee. So Lockton is the world's largest privately held insurance broker. We have over 140 different offices globally, but specifically within the energy space, we have a global team which is just over 400 individuals. We specialise in supporting clients who operate across the energy sector and really help them in understanding all the various risks which they're associated with, whether they are physical, human, or financial. And at that point, we then help them to not only understand them, but also then reduce, mitigate, or transfer these using a variety of different solutions, of which insurance is one of them. But ultimately, our goal is really to help our clients protect their business, facilitate any financing which they might have, and investments, whether it's existing operations or if it's developing new projects.
On new projects, something I've heard a lot as someone outside of insurance is that if it's not insured, it simply won't happen. It won't get built. And something that does need to happen is build out of new clean energy solutions. And the world committed at the COP28 climate summit to treble the world's installed renewable energy generation capacity this decade. So what is the role of insurance in this? How can insurance solutions help to reduce risk and unlock funding for renewable energy projects?
Well, I think it's a really important question, Sarah, because I think unfortunately insurance doesn't always get portrayed in a light that shows the impact that it typically has. I would agree with you completely that the role that insurance really plays is something of an unsung hero quite often, where without that kind of backstop that insurance provides, it would really restrict the amount of funding that banks would be prepared to offer, or even the cost at which they were willing to do so. So understanding that role that insurance plays and trying to position it at the beginning of a conversation around any investment, whether it's an established technology or a new technology, is really one where it's recognizing that without that insurance product sitting underneath these transactions, quite often funding isn't going to happen. Or if it is going to happen, it might be at an extremely high cost, which, knowing what's happening in the world at the moment, there's a tremendous amount of uncertainty when it comes to the supply chains, or whether it's shifts in the economy. So banks are looking for ways to protect their investment, and insurance really does provide that level of comfort to allow them to not only lend, but perhaps lend more at more favourable prices.
Got it. And Gary, you've mentioned what I was going to come on to next, which was the mix of established and new technologies that are making up the energy transition. So there are so many different parts to this transition, whether that is more established renewables like wind or solar, or whether you're looking at first of a kind projects in fields like hydrogen, small nuclear, next generation energy storage. So when you're tailoring an insurance solution, how does it need to be different for a more mature versus a less mature energy transition technology, taking into account those different levels of risks associated with different maturity levels?
Well, at the moment, we're obviously living in a world where there's such fast and continual technological progression and development. We're seeing the boundaries of technologies continue to evolve every 6 months to a few years. And whether you're an investor, a developer, or an operator, as a result, there's going to be a degree of uncertainty as to whether this technology will work, whether it will be reliable, and whether it will operate without periods of interruption or damage. And really that applies to established technology and developing technology. And across all the different energy transfer stakeholders, this challenge exists. And we think that the role that we need to be playing as a broker at Lockton is to help create a pathway that creates this partnership between the manufacturers, the clients, and the insurers. And whether it's hydrogen, carbon capture, or battery technology, the process is the same that we need to follow, in that everybody that is a stakeholder in that process participates in the journey together from the beginning and as early as possible. So for many of these technologies, the specific risks will differ, whether it's a certain type of hydrogen technology, ammonia, LNG, or battery. But the process, which involves getting the right creative decision makers in the room at the right time, sharing the knowledge, investing that time in their understanding, is a proven formula from what we've seen in actually getting projects over the line and on time. And the reality, I think, is that those who are able to commit to this investment in time and effort, these are the people that are going to be the real winners in succeeding with these projects and helping these technologies to go to into the operational stage. The role that the broker plays, in our view, is pretty critical here in bringing all these parties together. But really, even for thermal gas, established power, and other technologies, the economic and financial environment around all of these technologies is changing so quickly. And so as a result, the solutions also need to be flexible, and we need to manage these very carefully as to how the landscape continues to develop. So that it really requires a lot of pulling everybody together and sharing knowledge where we can.
And I was going to ask whether there need to be tailored solutions based on geographies, because, for example, the International Energy Agency has repeatedly highlighted that investment in clean energy in low-income nations is more challenging. People might even see an established technology investment there as a risk due to a lack of infrastructure, perhaps, or just different perceptions of risk. So as well as tailoring to different technologies, do insurance solutions for clean energies need to be bespoke for different regions and geographies?
Well, Sarah, I think there'll always be an element of bespoke in terms of approach that's required for every project, whether it's a battery storage facility in America or Africa. Each project is going to be, to some degree, unique in its own right. Now, having said that, I think it's a fair point that within each geography, again, you're going to have different specific requirements that a project will face, and therefore its own kind of unique solution that will be required equally. So some of that might be regulatory driven, some of it might be natural catastrophe driven, there might be labour challenges, there may be difficulties in access to materials or spare parts, and there might also be risks associated with political and trade credit. So a number of these aspects together definitely do make the geography aspects of things unique from place to place. But when you look at the technology and you actually look at the actual components, whether it's a type of gas turbine that's being constructed in one region versus another, a lot of the technical learnings are quite often very transferable. And that's why, again, this partnership aspect is so crucial. And at Lockton, we're spending a lot of time with a number of different working groups across multiple different technologies, where we're sharing our experiences to understand what are these risks and also what are the best solutions for our clients.
Yeah, and you've mentioned partnerships a couple of times, Gary, so it'd be good to hear about who would be the partners in that scenario. Is it just the project developer? Is it policymakers? Who is around the table?
Well, I think the answer to that is probably a range of different stakeholders depending on the actual projects at the time. Quite often we find that the key stakeholders would be the contractors who are actually helping to construct and develop some of these projects and technologies. It will be the clients that will help to eventually operate them and will be stewards over the contractors to ensure that the project runs smoothly. But it will also be the insurers themselves and perhaps the manufacturers. So it depends on the specific project, who's driving the bus. And it's really about just getting everybody in a room where it makes sense, and also understanding what the contract requirements are as well. And where we really like to try and get involved at Lockton is at the very earliest stage possible, where we can understand the project, we can really help to support the feasibility of the project, work with manufacturers' requirements, understand the contractor's needs, and through that you go through a journey together. And ultimately our goal is to help everybody get this to financial close and to get a project at the start of the construction to actually move forwards.
Great, that makes sense. And we've talked, Gary, about how exactly you can support new technologies and more efficient technologies by de-risking them and unlocking investment, and how that's not something you can do alone, that's collaboration. But I think something that you've mentioned already is that insurance sometimes gets a bad rap, either because people don't understand how crucial it is for financing, or in sustainability, people often call out those who are heavily insuring or reinsuring some of the dirtiest kinds of fossil fuel projects. So we've talked about the sort of lever of moving forward and unlocking more clean technologies and more efficient technologies. But what is the role of the insurance sector in helping to phase down or out certain kinds of fossil fuels in countries that have committed to doing that?
It's a delicate question, and it's one that I think has been in the news a lot over the past few years in terms of, what is the role that insurance should play in supporting this transition. And I think the answer is that it's complicated. And now, having seen the last few years play out, I think where the market currently is at the moment is it recognizes that some of the organizations that are going to be the biggest players in supporting the energy transition to succeed are actually some of the more established fossil fuel hydrocarbon clients. And those are some of the organizations who have the balance sheets to support the transition. They have the project execution skills to actually deliver some of these projects. And some of the insurers, I think, have recognized that in order to help support the transition, you've got to do it from being on the inside. So I think there's a real pragmatical view that a lot of the insurance market has taken in recognizing that the industry is one that, as the name suggests, is in transition. It's not an industry that just turns off and on from one technology into the other. And so I think you'll find the insurance market continuing to play more of a partnership role than one of a policy setter, which was never really its purpose at the very beginning anyway.
And just to clarify, so does the industry tend to work on a project by project basis? So you wouldn't just insure an energy company as a whole, it would be a project or a set of its projects?
So it really depends on the type of technology and how homogenous some of the projects are and some of the technologies. What we typically tend to do, unless there's a very known established pipeline, we tend to create bespoke solutions for individual projects. And some of that allows us to cater for lender requirements and other technical needs. There might be very specific coverage requirements, say natural perils or similar. And on that basis, you can create a solution that is very tailor-made. But having said that, we are also seeing a number of clients who are ambitious in their pipelines of construction, and we are able to create products that create economies of scale. There's efficiencies. It helps get profile in the market and attention. So that really depends on, if you've got a known pipeline, you can articulate what it looks like and you can help create a solution that meets all of those projects' needs. But typically, if it's over a certain size, we tend to sit down with the client, spend a lot of time understanding what does that specific project need and how can we create something that's tailor-made to ensure that the coverage they get is exactly what they need, whether it's during operations or whether it's from their lender financing.
Got it. And Gary, we've talked there a lot about things that will shape climate mitigation, so things that will impact the emissions trajectory of the world in the future. But I know you've also mentioned essentially at the beginning how risk is the bread and butter of what you're doing. So it would be remiss of me not to mention climate adaptation. So how are you preparing to account for changing climate risks in your solutions? How do you make sure that when you're insuring a project, it's more resilient against, for example, extreme weather risks?
Well, I think the climate risk aspect is a topic which is going to continue to be discussed for many years to come, for reasons that I think are probably, very kind of familiar to us all. For us here at Lockton, one of the first things that we need to do is to make sure we actually understand what the risk is and what can go wrong for a client. So we spent a lot of time at the beginning really trying to understand, working with our in-house engineers, working with our claims team. We've got a wealth of experience to identify these risks. And this is part of a early advisory process that again happens very early on in the stage of planning, where we can talk to a client, identify what these risks might look like, and then go to the financiers and people that are actually providing the lending and say, these are the risks and these are how we're going to help transfer them or mitigate them. And getting ahead of these risks and how they can be transferred, we think is one of the key aspects in getting, again, this funding aspect that I mentioned earlier, really over the line. This risk advisory piece is a massive part, I think, of the energy transition. It's that partnership at the beginning, which clients and investors desperately need. And, we've got solutions, whether it's insurance solutions or parametric solutions. We can look at what the insurance market will traditionally provide, and there's different ways we can model that and come up with scenarios, and then gaps which are then appearing based on what the insurance market will not cover. We can look at alternative risk transfer solutions to help effectively cover those gaps. So I think there's a risk identification piece, which is probably the first thing we do. But then to your point, the second piece is around how do we help improve the risk? And how do we help, for example, strengthen assets? And we have a team of risk engineers who can help work with clients and provide realistic next steps to help go through their asset base to prevent any more damage than occurring than absolutely necessary, so that if climate related perils continue to increase, their assets stand the best chance of performing as well as possible through them.
Got it. Well, Gary, that's just about all the time we have on this particular episode. And I think we've covered so much ground. We've not just talked about big level concepts, but gone into loads of specifics and actionable points on measuring and acting on risks and opportunities in the energy transition. So thank you so much for bringing that insurance voice to our sustainable business audience. There's definitely some food for thought there that I hadn't heard of before. Thank you so much, Gary.
Thanks very much, Sarah. Really enjoyed the conversation and appreciate being invited on today.